Our next guest is looking at markets through the lens of basketball. Tom Lee, Fundstrat Global Advisors Managing Partner and Head of Research, says granny shots, you know those underhanded free throws, well, they may not look good, but they score big points. So tell us what your granny shot stock picks are. And I have to tell you, when I heard the term the first time, I was thinking of, senior citizens who are women actually doing jello shots. So set me right.
That would be amazing.
Yeah, that might be a better, visual. Yeah, so granny shots are thematic-based stock picks. So we have three general thematic views about the next few years. One is millennials, another's on AI, another's around automation and asset heavy. And then we have some tactical portfolios. And what Granny Shots is doing is taking stocks that appear in multiple lists. So we think it's improving your chances of picking outperforming stocks. That's why it's not cool, because we're not using like one cool model, but it's higher risk reward opportunities. Higher reward risk opportunities.
So basically you want to increase the chances that the stock is going to do well. And the analogy you used, you were looking at Rick Barry, who was a player who threw basically underhanded, right? Versus other players who don't have, like a Shaquille O'Neal, who wasn't a great free throw thrower.
Yeah, so it doesn't look great. So Rick Barry, so mechanically the best type of free throw to do is underhanded, because it's the best way to do it from a physics perspective, and he is, one of the best free thrower percentage in history, and he doesn't look cool when he does it.
Right.
When he did it.
You can tell I'm not big on my basketball.
Help us make sure we get this, and I'm going to try and put this into simpleton terms for those of us who want to use this kind of thing. But when you talk about the equity risk premium, essentially what you're saying is your risk is at a metric that's perhaps better than playing the safe game, and usually that metric is 1.9%, but you're identifying perhaps stocks or sectors where that risk premium is actually 3.5%, so it's a better bet.
Yeah, that's right. It's basically saying you're paid to take the risk because you've got a cushion against a loss. And that's why when risk premia is high, it means stocks are essentially better bets than bonds.
I'm going to ask you who.
Yeah, I mean, it's interesting when you look at this list, if you think that some of these are not cool. I mean, some of them are sort of the commonly held names, like an Alphabet or an Apple, but then you've got Ameriprise Financial on there, which is not necessarily Brown-Forman. That's one that sticks out to me. So what are the themes that converge for some of these names that you wouldn't necessarily think of? Yeah,
so an example would be like Ameriprise. It's actually a good way to play what will likely happen with millennials, because millennials are going to become quite credit intensive over the next 20 years. Part of it is, because they're going to start buying cars, houses, they're going to inherit $68 trillion. And so companies that are is volume sensitive in credit will actually do quite well. So that's why Ameriprise on there, I think JP Morgan and a few others. But there's also a tactical element. So some of these, I know that Brown-Forman is what we consider a 6-month holding, meaning in the next 6 months, the sector that it's in tends to outperform. So we do tactical plus thematic.
Cool.
Hey, let me ask you about Bitcoin here, because it's kind of broken to the upside. I'm just wondering if you have any blockchain companies in there, fintech plays, and what are your thoughts on Bitcoin right now?
Bitcoin had a good year last year, even though it didn't recover its highs. It was the best performing asset, right?
About 100% or so?
Yeah, so it had 3 times the return of the S&P. But in 2020, and we just published our outlook, we think the return of Bitcoin will be even better. So I think this is a setup where the geopolitical tensions that are pretty elevated this year, plus this thing called the halvening, which is the block reward for miners getting cut in half, plus what I think is improving institutional interest, is a real setup for Bitcoin to do great this year. And I think if someone's trying to find equities to play this or through the traditional markets, companies like Square aren't a bad way to get exposure. But there's also a publicly listed investment vehicle called GBTC by Grayscale Investments. And for many U.S. investors, they can actually access that.
Tom, you talked about the millennials getting ready to inherit, basically the greatest wealth transfer in the history of mankind. When you think about that, talk about how that affects your thinking about markets and stocks over the long run, and are there any names on your lists that might be, outperformers on that basis?
Yes. Yes, and clearly this is going to have a big influence on equities because you have to remember $68 trillion transferring from one single 20-year generation is equal to the wealth of the entire country of China and Japan combined. So it's monstrous amounts of money. And it's at a time when their consumption profile is growing. So I think the odds of equity returns being better in the next 10 years than the last 10 are quite high. So in other words, we had a great move from 2009 to 2019. I think stocks from 2020 to 2030 could do even better.
Can I ask you a little off topic, but this wealth transfer is a fascinating concept. At a time when you would think millennials are listening to a political message of raise taxes, are they going to continue to perhaps follow that if they're about to inherit a great amount of wealth? Is that perhaps...
Yeah. It's a fair question. I mean, let's say taxes are uncertainty that they raise taxes in the next 10 years, and it's likely. The return on bonds is going to look even worse. And so you want to own something that will outperform the tax hit plus inflation plus growth, and that is basically stocks, or real assets like real estate. So I think heavy assets plus equities will be real standouts in the next decade.
So people buying real stuff.
Real things, yeah. And, even real businesses, in some strange way, I know people when they think of private markets, they think of private equity, but you know that small businesses today might be the value play. You can buy a restaurant for 4 times its profits or an MRI center for 3 times. So if you're an enterprising individual and you don't want to buy healthcare stocks, you could buy an MRI center for a low multiple.
All right.
All right, Tom Lee, managing partner and head of research at Fundstrat Global Advisors, with how some people can make a living, and not a bad one at that. Thank you very much.
Thanks, Tom. Good to see you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.